G'day traders, Sam here from Trade to Prosper, and I'm here to talk about pretty much cryptocurrency. But you can't talk about cryptocurrency without looking at the other the other markets like the S&P 500, Nasdaq, and the US dollar. So let's touch these three topics in sequence. So let's look at the S&P 500, then the Nasdaq and the US dollar, and then we'll go and move on to Bitcoin and maybe Ethereum. So we know about the Fed talking about the inflation rates are being 8.5, which is a load of crap, but the markets have responded positively today with a bullish sentiment at this point, even though we're in a bear market. So what we have here is the monthly, and I want to talk about a few things quickly, and it's going to be a point of interest. So basically, that we've got the white one here, which is the monthly 21 moving average. And in many cases, when we lose the monthly 21, it pulls back much deeper, as you can see in the past. And the cases where we close above it, it continues on. Like you can see here, where we lost the monthly, but we gained it. So this is a bit confusing there. So that didn't quite help us there. But here, once we lost the 21 monthly, we had a much deeper correction. And then once we regained it, like there, we had a big move up. And so similar here as well. Once you lose it, first support, losing it, and then once we regain it, we had a move. Now this is happening as well, which is surprising. But we still have a long way to go with the month. We've still got another, 20 days. So this could end up closing below it. If it closes below it, do understand that we're going to go down much further. Just pretty much like this. We'll go down much further, and the conditions are pretty much like 2008, 2009, where quantitative easing, a lot of mass printing. So this all is based on printing money. So, but the thing is that the inflation rates weren't as bad. Now we're caught up with inflation rates that are really bad, and so the government or the Fed has two scenarios to go with. Either they're going to go with hyperinflationary markets, or they're going to go with economic recession or depression. So, raising the rates is the tools they have, um, and managing the downfall, I suppose. So they might slow down the economy, which is probably manageable for them because the inflation is going to be the one that impacts living standards. So they don't want to control. So what they will do is basically, as inflation rises, they will increase interest rates, which will basically slow down the economy, and they're happy. And then probably 2023 will be where we see all that impact, and the quantitative easing, the mass printing of money will then give them that tool will come in where they will reduce the interest rates and start printing more money. And I suppose that's where we will probably, it's a theory, and a theory that wherever we drop down to, then that we get a reversal. So I do see this as going to be a deeper correction. So A, B, C, who knows? But that is my theory at the moment, because tell the truth, that we have never had a scenario which is as bad as we are with the inflations at the moment. So anyway, getting that out the way, let's look at on the weekly basis. So what we have here is my Fibonacci levels with the previous low to previous high, and actually probably go to the daily is a bit better. And what I got is a number of tools on the screen. We've got the channel, and this level is of importance to me. So from the swing high to the swing low, we've got the 0.5 Fibonacci, and then we've got the 0.618. So, and similarly, we have the 200 moving average that's been broken. That was resistance, and now we have this other Fibonacci macro, which is a 0.7, and we've got the channel. So this level here is a strong resistance level. This is the 200% on the pitchfork. So if we were to add Fibonacci here as well, I don't know where that went. If I was to do the Fibonacci on this wave, from there to there, you can see the 618 is also resistance as well. So we've got a number of about 3 elements that are saying this level is strong resistance. You can see that this is previous resistance here as well. Let's just do this. That's the previous resistance, previous support, and so on. So this, for now, I think we might get a pullback, and potentially we could get a double top. And if we lose this level, then we'll continue further down. So I'm looking at that kind of scenario. Otherwise, we could potentially go to the 618 and this 200 moving average, and I do see that coming back down. I can't see this. So this is going to be another extension from the pitchfork, but potentially maybe come down. I'm still bearish until I see it close above this 200. I'm not going to be bullish at all. So that's one perspective. And if we look at the dollar, the dollar has broken this trend line. So I do think this will come back down more. But this is the next level. So we've got to see how it responds. But I do think that we have a bit of a bullish momentum. But September is where the Fed comes back in, and they might raise interest rates. So let's see how that goes. But 2023 is where I think it's going to be really bad. Anyway, so that's another perspective. I want to do the NASDAQ. The NASDAQ is very similar. So let's go to Bitcoin. So with Bitcoin, this is one of my charts. A long-term trend line, and we've got the resistance there. Initially, it acted there, and we broke above it, and then we got this secondary trend line, and you can see very accurately it's been, and eventually we broke above it, got the retest, and then we moved up. Now, it's also at the same time an ascending wedge. So what we're going to do is look at this scenario, and I'll bring out another chart for Bitcoin. And this doesn't look the best. It looks like a grind. It doesn't look like a reversal. So we have this grind, and we could potentially have this ascending wedge. There's a possibility that we can go a bit higher, get a rejection, find this as support, and then up, and then come back down and further down. Okay, or the other potential is that we just come down. At the moment, this is what we're having. If this was to push up, then we could get a bit more momentum to then come to this level for rejection and then back down. So I'm looking at this rally, and if we're right, you can see that trend line coming into place, acting as a resistance as well. So that will be our first what we can cycle. This could be a second cycle, and I'm looking for the third cycle. And the third cycle doesn't have to go that low, but then we can have potentially. I'm still bearish, yep. And this fits into one of my strategies. I've observed this many times, but not on such a big scale. So I do see this potentially playing out as well. That's what's going to happen there. Who knows? We can also see if this is balanced. Okay, that looks like a nice trend line as well. Okay, so that I'm looking at that potential scenario, and then we come back down, either a double bottom and up, or further down and up. And you can see in many cases in the past, um, the bottom, if we look at it, it gets a rise and then evens out. So the bottom is likely. So this doesn't look like a reversal. Nothing like this. That will took 3 months. This is just a grind. Yes, it can go up, but the volume, yeah, the volume's picking up today. Yeah, this today and the past few days, the volume's picked up. How high can it go? I do see this as a relief rally rather than a reversal. And so let's do this. Do not FOMO in, guys. That's my advice. And geez, I'll do some of that. I do see this still continuing on to the upside. We can potentially go to the first one is about 25k. But really, when you look at this, we've got a fair bit of resistance along the way. So I do think that this is a bullish setup as well here. This line here is a bit of a bump and run scenario. So if I was to do this, that is a bullish scenario as well. If I was to get the log away, okay, so that's the only way we can do that. So go back to the original. That trend line is still relevant to me. This line could be a nice one. So a bump and run, and in many cases a bump and run. So what would that? It just continues on, but then, and so at this 0.5 or this fib extension could play our results. Let's have a look at another perspective. While we're here, we can say that's our one. Again, we have that level as well. If we were to bring this further down, we've already reached, so that's why we've got a bit of a resistance. So if that's our one here, the 1.618 is our resistance. So where is it? There. That's why we're getting a fair bit of resistance here. So that is a strong resistance. But what we're seeing from that perspective, what we're seeing is lower highs. So it's looking good. I didn't want that. I want to draw. So we've got this line here as well from another, but this grind line is important. The moment we break that, so we get the compression. So what we want to see is on smaller time frame. Let's go to the 4-hour. We want to see the cup. So if this comes back down, which is likely, we want to see this cup formation, and then up, and that will just, it needs to be demonstrated. I think that this is a strong resistance, as we know. This was the first one, but there's always two layers, if you ever noticed. So the 1.618 is the resistance from, and you saw how I did it, making this level 1. As you can see, this is level 1, and then you can see how 1.272 comes into it, 1.414 comes into it, and 1.618 comes into it. So the micro one, this is what we're having. The fact that we've broken this trend line, and we've got this trend line. So we've got two trend lines that are positive, and if we break this level, I do think that it's not going to be good. We can't afford to lose that because of the trend line. Otherwise, it's going to come back down to this trend line for support, and then probably go sideways or further down. So that's my thinking on that on Bitcoin. Um, yeah, I'm still macro bullish. I still think we got the 24, 25K, 25K, yep, around there. Even there, one could be 26. So we've got a lot of resistance along the way. So here's one of them. This level here, that's going to be a strong resistance. One is going to be a fib extension. That's very strong resistance. Usually, when you have a reversal from a wick-off structure, the one is a bit of a sell-off. And if you were to break one, then these levels come into play, and in many cases, if um, if we look at this, you can see that 200 moving averages come towards this level as well. So I do feel like this is going to be strong resistance, and if price was to come, it will just come like that. That will be a good position to short. Obviously, we need to see what's happening here at the same time. So a lot of things have to be in synchronization. In Ethereum's term, Ethereum, I have the similar with the moving averages, and we just broke the zero point 0.5 fib level. That was our main resistance along there. Now we're headed for the 0.618, and you can see that's going to be a strong resistance. And I had this boarding wedge. The maximum it could probably do is hit that level. What we have here on the smaller time frame, we'll do on the daily, is also another ascending wedge from this perspective. From there, so we have this tightening wedge, but from a macro perspective, I do see this. So what we've done is we've broken this trend line, and it's acted as support. So yeah, this to me is going to be the main resistance. I think Ethereum could keep going. Um, this could be just pretty much like that, a bit of a channel, can't it? Just thinking out loud, guys. So far, that's what we have, a bit of a channel. So yeah, this could go sideways and then find resistance there and come back down. Anyway, I'm going to leave it at that. If you've got any questions or commentary, please do so. Come and join our group. It's in the signature, and please give me a like and share. Talk to you soon. Cheers.